CoinShop dealers say the unthinkable. Fed opens floodgates for silver. We're living in crazy times where silver price is doing the opposite of what it's supposed to do. Gold is doing the complete opposite of what it's supposed to do. Yesterday, I visited my local coin shop and had a chance to speak with two dealers. Both blew my mind. My local coin shop dealer says the constraints put on our economy via the Fed's interest rate hikes will push silver to the $30 range despite strong treasury yields, despite strength we're seeing in the dollar. Yes, you heard that correctly. Silver will do the opposite of what it's supposed to do. In this video, I'll break this down for you and show the Fed's pivot to keep high rates is actually flipping silver on its head. Let's start with this headline from Yahoo Finance. This is from Bloomberg. From Bloomberg, it says, "Are rates high enough? Fed resets clock on interest rate cuts." The article starts by saying a string of disappointing inflation data has forced the Federal Reserve to reset the clock on its first interest rate cut and reevaluate the trajectory of price growth. Now, the first thing we have to understand is the Fed's point of view of this disappointing inflation data. I mean, come on, labor is showing strength. We have a tight labor market. People have money and they're spending money. They're putting a boost on demand, and that's frustrating the Fed because people are. The Fed's view is that this demand is keeping inflation up. So what they're trying to do with keeping these rates high is backfiring. It's not working. And let's continue. Let me just continue. The article says Chair Jerome Powell cemented that message this week when he said it's likely going to take longer than expected to gain the confidence needed to lower rates, dashing hopes for more than 2 cuts in 2024. Somewhere there won't be any cuts at all. Many people are saying that. Now, Powell's lack of urgency to adjust rates echoes that of his colleagues. But we've heard this throughout many central banks, all of which who feel ready to pull the trigger without waiting for the United States, right? But everybody still, at the same time, are watching Powell, and although his colleagues are echoing the same, we've heard mumblings of them feeling otherwise. This article says, but the enduring strength of the economy and labor market, alongside a market rally at the start of the year, has also reignited a debate about just how restrictive monetary policy is, and really just how restrictive it needs to be, because if keeping these rates high is not having the impact that we're looking for, then maybe this is not working, right? The article says Fed officials are increasingly voicing concern high borrowing costs may not be doing enough work to rein in demand, increasing anxiety among investors and analysts that the central bank may need to raise rates further. The article continues, most policymakers have made clear they expect interest rates are at their peak, but some Fed officials have expressed an openness to the idea that it should be necessary to tame price growth. New York Fed President John Williams, who describes current policy as restrictive, said Thursday that raising rates is not his baseline expectation, but he added it's possible if the economic data warrant higher rates to reach the Fed's inflation goal, then that's where we have to go. Now, this comes in the same breath as treasury yields showing strength, the dollar showing strength, and silver and gold showing strength along with them. And this is where my local coin shop, these two dealers that I was speaking with, I really wanted to get this on video, but they just were adamant that they have no interest on being on YouTube. They both feel that we are in a new moment in history, because this is unheard of to see silver, like this silver here, to see this silver, which typically when the dollar shows strength, this silver should be dropping in price, but it's not. The same thing with gold, right? When the dollar shows strength, or when treasuries also show strength, that means that people are choosing to put their money in those areas to get a return on investment, and likewise pulling from precious metals. But that's not happening. Precious metals are fighting and rising and showing strength right alongside. It's so bizarre. We never see this. And so these dealers are saying that this is likely to continue because as the Fed is going to keep these rates up higher and keep business as usual, as we continue to see uncertainty with the real estate market, and the word uncertainty is really putting it lightly. I mean, this is like serious disruption that we are experiencing with the real estate market. People should be buying right now. They're not buying because the rates are so high. So, I mean, it's really bizarre. But as that continues, silver will stay and push up to the 30, easily push up to the $30 range. Same thing with the uncertainty we're seeing with regional banks and the lack of support. Well, we pulled out that support from regional banks, so that now we're gonna keep waiting for these loans to mature and explode in our face. This is all keeping people feeling uncertain and having them put their money into precious metals. There's one more piece to this that is surprising these bullion dealers that I was talking to, and that is that yes, the dollar is showing strength. Yes, treasuries are showing strength. People are putting money in there. People are not going into real estate like they typically should in this season. But also, we've seen great strength in the stock market. Like people are still going all in and seeing record gains in that area. So this is unheard of. We typically do not see metals rising and going alongside these other areas. Typically, metals are kind of the last resort for people. Not so much for us, silver stackers, right? We go into these go into this silver like I'm holding here, and we stay for the long haul because we see the weakness in the fiat currency system that we're living in, and we see that inflation is something that is ongoing with the fiat currency. So we choose to be in precious metals, but regular everyday people who are now jumping in to precious metals, really, I don't think that the term fear of missing out is quite so accurate because it seems more like people are instead of putting their money in a large area like real estate, which is clearly struggling, they're choosing to go into precious metals. They're choosing to go into treasuries at the same time. It is something that we really have not seen. Now, this article says that much of the inflation progress seen last year can be attributed to improvements in the supply side of the economy, tangled up supply chains finally unraveling, and a huge influx of people taking vacant jobs. Now, yes, as that supply side has been cleared up, demand is still there, and that's really frustrating the Fed, to put it lightly. Right? I think that the idea was that this supply issue, the supply chain, would finally unravel, as this article says, and people would be nervous to spend. Right? But that doesn't make sense because the labor market is tight, it is strong, and the economy is growing. So people have money to spend, and they are continuing to buy. Of course, this is going to keep prices high and further frustrate the Fed.